Well, welcome everybody to this week's Market Insights. It's August 18th. Happy to have you. Hope everybody had a great weekend. I certainly did. Had a couple little grandbabies come out. That was way cute. It was fun. They got to meet our new puppy. So, yeah, good times all around. All right, let's get to it. Quick reminder that everything that we do here is for educational purposes only. It is not intended as investment advice. So let's move in the markets. Markets aren't moving much at all so far this morning. Let me kind of get the latest and the greatest. Of course, this will be different by the time that you see it. And S&P down 0.08. NASDAQ down 0.15, Russell up a little bit, 0.28. So where are the influences? There's not much out there. UNH has been flying. That's United Health Group on the Buffett announcement. Now, I got to tell you, it wasn't based on knowing that Buffett was going to buy their stock, but I jumped in last week just looking at the chart, feeling like all the worst was out. And even though it was speculative, it's not the kind of thing that I would, recommend to a friend, but I went in and bought some call options. So that's turned out obviously to be nice thus far. S&P continues on a record run. It was up last week about 0.8%. And it just keeps grinding higher. The 10-year Treasury pretty steady at 4.345. Same with oil, down in the $63 range. Consumer confidence fell a little bit for last month. It wasn't anything dramatic, but I think people are just generally feeling nervous. I'm not entirely sure where that is emanating from. I mean, most things generally feel pretty good, but I know the media does everything they can to scare the hell out of people. What should we be watching this week? We have anything that's likely to move the market? Now, let's take a look. Today we get the home builders confidence index. That's not going to change anything. A little bit of Fed speak Tuesday, more housing stuff. That's not going to move the markets. Wednesday, we have the minutes from the Fed. There's not going to be any interest rate announcement. That's not happening until September 19th. But we will get that announcement made, and who knows what might be in the minutes. And then on Thursday, we get initial jobless claims like we do every Thursday. Now, the flash services and manufacturing PMI, that should give us an idea of how the economy is moving ahead, along with the leading economic indicators, which are anticipated to be down slightly. And then the good chairman, Jerome Powell, will be speaking from Jackson Hole. So everybody will be cued in on that. Overall, relatively soft news week. I don't see anything that's going to change market direction. This is last week's heat map. Boy, the center of this looks really good, right? More green than red, which would evidence our market breadth from last week that was reasonably strong. Retail sales come in decent, not great. I think they were 0.1% below analyst estimates. This is the most interesting thing I've got to share with you. So I show you this every week. And every week there's a survey done of independent investors. And they ask them, over the next 6 months, do you think the market's going to go higher or lower? Historical averages, 37.5% say higher, even though the market is basically at an all-time high we're down to 29.9%. Historically, 31% say the market will go lower. We're up to 46.2%. That's in spite of the fact that we're expecting a couple of rate cuts this year. So surprising to me, because that also incorporates, so we're in August, September, October, November, December, January, and part of February, which are typically really good times. This week's earnings, anything of note on here? Palo Alto coming out after the market closes today. Home Depot, Target. So we're getting into the retail space. Toll Brothers on Wednesday, the big home builder. Walmart on Thursday. Ross on Thursday. BJ's on Friday. Any of those going to move the market a whole bunch? It seems unlikely. All right, let's take a look at the charts. Look at the SPX, which is, of course, the S&P 500. That is a 6-month chart. Obviously, a thing of beauty, from the time that we crossed above our 50-day moving average. Of course, down here, if you were a great forecaster, you saw that V-shaped recovery. Those are tough to predict, but anybody can see a stock crossing above a 50-day moving average. But ever since that time, it's pretty much been vroom. It looks like we're sort of leveling out here a little bit. We hit an all-time high, and now there's a bit of a pause, which, kind of par for the course. What are the other indicators telling us? The MACD is just dead flat. RSI avoided moving into overbought territory, and we're pretty flat on balance volume. So we're just kind of waiting for the next market catalyst to see what happens. All right, there you have it. That's what's going on. I'll check back in with you next week. So have a fantastic week until I see you again. Be safe, be blessed. Bye for now.